Hey everybody, this is Jason Ostrowski, and welcome to another episode of the Everything Real Estate Podcast. This week we're going to delve into a subject that comes along with doing a real estate transaction that is usually in the background of what we do as realtors. You know, we're so intertwined with the mortgage lender during a deal, and we're so intertwined with the title side of things when we're doing a deal, and we really don't get that involved with the insurance side of the business until there's a problem. I think as agents, we often assume that our clients, our buyers, are going to get homeowners insurance without any trouble, without any problems, and we don't need to think that much about what goes into insuring a property or the problems that can arise thereof. I also feel that when we do face problems as agents with insuring a property, it's often a certain set of problems that we face time and time again. So I thought that today would be a good opportunity to talk about those problems that we face, those pitfalls with the insurance side of the business with Peg Dynakowski, who is our Vice President and Risk Manager for Trident Insurance Agency. And Peg really knows her stuff. I think you're going to find this podcast to be very valuable for your business and for your clients. So let's have a discussion with Peg, and we'll pick it up on the other side. Peg is here to help us today. Peg, how you doing?
I'm doing just fine, thank you. Thank you for having me here, and thank you for including Trident Insurance in your podcast. I appreciate it.
Absolutely. Well, thank you so much for coming on. And, you know, we're going to jump into it right away because in this market, I feel like, you know, we have people that have been in the business for 40 years right now saying like they've never seen anything like what has happened recently in terms of the market. And one of those things that I think is different today than probably at any other point in time is the amount of buyers that are willing to waive their home inspections right now. And with that being the case, we also see that the seller's disclosure for the property is really the only way for a buyer to know the overall condition of a property or a home. And when information is missing or unknown on the seller's disclosure, like the age of the roof or heating system, electrical information, flood info, etc., my first question to you is, how does that potentially impact homeowners insurance coverage on your side?
First thing I'll mention is we hear it all the time about the buyers waiving the home inspection. Probably the four basic things that we're going to ask for every single time we insure a home is the age of the roof, the age of the plumbing, the status of the electricity. And basically what we're looking for there is that the roof is about 20 years old. Okay, that's what most carriers are looking for. We're looking for the electricity to be at least 100 amp service on circuit breakers. Okay. You do have a situation where if you have a 100 amp system on fuses, your insurance company will allow you to do that. The plumbing needs to be updated. If you have a 90-year-old house and they never updated plumbing, could be an issue. Okay. So if the plumbing was done in the last 35, 40 years, you're going to be okay. The heater, that was the one I was missing before. Okay. The heater, they just want to know is up to date and functional. Okay. Most carriers will look at a heater that's 35 to 40 years old and be okay with that. So common sense things, you know, everything's working is the most important issue. Does that help?
Yeah, absolutely. And, you know, some of those items I think agents are aware of, especially the electrical, and we're going to get into that very shortly. But even, you know, that age of the roof and the age of your plumbing, I think those are kind of items that kind of can be eye-opening for an agent when they actually put a property under contract, especially because the Philadelphia area is full of homes that are so old, right? We are a historic area. We're on the East Coast. We're older. We're not like out West. And so I think, you know, that comes into play for insuring a home, obviously, more than it would say, you know, for different reasons. Obviously, insuring a home, say in California, is going to be different than insuring a home, obviously, on the East Coast. Okay. So the real hot button topic, and no pun intended with that, but this is the most common question that we ever get for real estate agents. And you probably know where I'm heading with this, but Knob and tube. All right. So knob and tube is the bane of a realtor's existence. And I'm sure it's probably the bane of your existence as well. First things first, can you talk a little bit about why insurance carriers are so loathsome to cover knob and tube? And you kind of answered that already about fuses, but let's start with knob and tube and why it's bad.
Okay, knob and tube is a wire that is covered by cloth. Okay, so the electricity is going through the wire. What do you think is happening to the cloth? The cloth is heating up. Okay, the knob and tube wiring with this cloth wiring is up in the attic, covered by insulation. Okay, what happens when all systems are a go, everybody's home, every possible electronic appliance is on? The possibility of it heating up, okay? Think about it this way. If you took a house that had one TV, one computer, could knob and tube handle it? Maybe not. That's the sad but honest truth, okay? It also means it's very old. Knob and tube went out of vogue back in the 50s, okay? So if there's still knob and tube wiring in the home, there's a very good possibility it's been there for 70, 80, 90 years, 100 years, okay? What has happened to that? It's worn out. It could have gotten nibbled by some creatures, walking around the house at night. So it presents a danger. It's not modern, it's not up to date, it's not current. And based on today's households, you really do need that protection of having an electrical system that is up to date and can handle the usage for the household. So that's why they don't like it, because it heats up. If there's ever a claim where knob and tube wiring is around, they will always find that knob and tube wiring over the years has been frayed and it's breaking down, and that's what makes it dangerous. Does that make sense?
Yeah, absolutely. And I've sold, numerous properties in certain pockets, right? So I think when I think of knob and tube, first place I go, I think about Chestnut Hill, I think about Westmount area, I think about Eastmount area. Those places tend to have, knob and tube in a lot of the properties around that area. So I have been told in the past, just a side question to this, I've been told in the past, and this may have changed, and I know that it's changed, but it used to be some carriers would say, well, it depends what it operates. You had mentioned the TV before, or how much there is in the home. Is there more than 10%? But we know if you're running an oven off a knob and tube, that is probably a bad thing, something that requires a lot of juice, as opposed to, say, a lamp or, a chandelier. So can you speak a little bit, just to clarify, is any knob and tube in the home uninsurable at this point?
And the answer to that is yes, it is uninsurable. We did have a few carriers over the past 30 years that would say, okay, if it was just doing one light down in the basement, that's okay. Okay. We do have a few carriers left, okay, who will say, if we see a actual contract that the knob and tube is going to be replaced within the first 30 days, okay, they will go ahead and allow us to issue that policy for settlement. They will follow up with us religiously to make sure that that knob and tube wiring has been replaced. If we don't get the final clearance from the buyer that it's done, it's replaced, everything's fine, here's the payoff number, here's the letter from the contractor saying everything's done, they will cancel the policy. Every insurance carrier out there has the right to cancel a policy within the first 60 days. When it's knob and tube, they're going to follow that religiously. Okay.
I'm sure they are. Yeah.
Okay. So, and that's a slim margin, and they don't want to see an estimate. They want to see a signed contract saying when the work is going to begin and the estimation for when the work is going to be completed. And that's the only slight little loophole we have in the system anymore. Everybody wants 100 amp service on circuit breakers. If it's on fuses, we can review that with the carrier. That's not a given either, but they really want 100 amp circuit breakers. That's it.
And that's my follow-up question is about fuses, right? Because I think fuses is a gray area for many agents. You know, when I go into a property and I see the fuses, I'm like, I'm not sure about this. So you say there are some carriers that maybe will do fuses at this point. Do you feel like it's trending in a direction where fuses is going to go the same way as knob and tube and be
Absolutely.
looked at as something that's going to be rejected in the future?
Yeah, I can see that coming down the road. Absolutely. And again, what is it powering? You know, a 900 square foot home versus a 3,000 square foot home makes a big difference. And out on the main line, you will still, not very many, but you will still find homes out there that have both the knob and tube and the fuses. Okay. So that is a concern. But yeah, I can see the fuses going the way of the knob and tube.
And that makes sense. I mean, as the property gets older and we get more and more into the future, you know, fuses, again, like you had mentioned, knob and tube hasn't really been around since maybe the 50s. You know, fuses are kind of going that certain direction as well. You know, you're not seeing any fuses used nowadays in new construction, obviously. So I can see that happening. So moving from one disaster to another is kind of what you do for a living. So if we get into, if we pivot to flood insurance, okay, that's the other, I feel like, big area for agents that we deal with. And potentially we know a little bit, we may not know a lot about flood insurance, how that works. So, you know, many agents may not ask enough questions about flood insurance when they actually go under contract with the property or they're about to write an offer up. They just don't think about maybe asking about flood insurance in general. And if it's not on the disclosure, if they're not saying anything about it, or, you know, if a property is grandfathered in and those FEMA flood maps have changed. So, you know, there's a lot of things that go into flood insurance that you need to check out. And many may not know that just because the current owner doesn't pay flood insurance, like I had mentioned, that it may not be a case when the buyer applies for their new homeowners policy. Can you speak a little bit about what to do proactively to know if the property sits in a floodplain?
Okay. First of all, my first comment as an insurance agent is everyone is in a flood zone. Okay. No ifs, ands, or buts. Okay. What makes a difference is what flood zone are you in? Okay. If you're in flood zone A or V, and here's my strongest comment of the whole session. The mortgage company is the final determination whether or not someone needs flood insurance. Okay. So if your home is in flood zone A or V, you're not going to go to settlement with that mortgage company without flood insurance. So they're the final determination. They run their own flood zone determination to say, yes, you need flood insurance, or no, you don't. Okay. If you're not in zone A or V, you can still get flood insurance, but your mortgage company will not make it a condition of your mortgage. Okay.
That's great.
Homeowners policy, the HO3 that you get through settlement, because once again, it's a good idea, but the mortgage company does require it. The mortgage company plays a great role in these real estate transactions. Okay. Your homeowner's policy never, ever, ever covers flood insurance. It's a disclaimer in every single homeowner's policy. So the mortgage company determines if you need flood insurance. Okay. They tell us what zone you're in. And again, these zones A and V are the ones that are going to have flood insurance to go through settlement. Okay. I was going to point out, and you can use this or not use it, but I mean, the perfect example of people being in a non-hazardous flood zone, and they are like B, C, and X's. Okay. They get a preferred flood rate. Okay. So their rate is going to be lower than someone in zone A. And I can tell you off the top of my head, $250,000 on the home, $100,000 on the contents in the preferred zone is going to cost you about $500 a year. Okay. Look at all those people in Bucks County a couple weeks ago whose homes were literally almost washed away. I'll lay you odds they are in zone B, C, or X. Okay. No doubt about it, because they didn't need flood insurance. Okay. Interesting on flood insurance is there is a new program coming into effect, provided, of course, Congress passes the bill and signs it, effective October 1st, which is going to change flood insurance to a certain degree, okay? It's going to be rating individual homes rather than whole areas, okay? Where an elevation certificate does come into play, okay? If your home is sitting up on top of the hill, and at the bottom of that hill is flood zone A, which the mortgage company is beating you over the head telling you need flood insurance, okay? That elevation certificate, which basically means they determine the base flood elevation, how high is the water going to come for it to be considered a flood. I use the example of 10 feet, okay? If your house is sitting up on the hill and your base flood elevation is at 14 feet, okay, that elevation certificate could save you $500 a year for the life of the mortgage. Is it worth getting an elevation certificate? Absolutely. Okay. Now, interesting enough, the new flood program, effective October 1st, is not going to make elevation certificates a requirement. Okay. Which we're in a situation right now at today's point where if you didn't have an elevation certificate, you may not be able to go to settlement, and that is based on when your home was built, okay? If your home was built after the original flood map was done, you would have to have an elevation certificate to go to settlement. Effective October 1st, that will no longer be true, but that elevation certificate could still save you a lot of money over the life of your mortgage, okay? The other thing I found out too, and from doing this over years and years, is the person that is, you're listing your home and you currently don't have flood insurance. That's because when they paid off the mortgage 10 years ago, they canceled the flood insurance, which is never a good idea, okay? Because the mortgage company said you had to have it because you're in flood zone A. So that's another thing where just people currently have flood insurance obviously is never the final determination whether or not you need it.
Oh, I think you covered a lot of ground there and gave great information on flood insurance. A couple questions I have. So, you talk about $500 a year. I've heard of policies having to be up to $6,000 a year for like a major flood zone. Is that something that I'm talking
about? Okay, my remark about the $500 a year is for a preferred rate. So that's in zone B, C, or X. Okay, mortgage companies don't care about those properties. Okay, they will not require you to have flood insurance. It's incredibly difficult to give an average price, but I would say if your mortgage company is coming to you saying you have to have flood insurance and your home is valued at $250,000, you're looking at a bare minimum of $1,200-$1,300 a year. Okay, and depending the flood program only covers you up to $250,000 on your home and $100,000 on your contents. And most mortgage companies are okay with that. They means you have flood insurance. If you have a really high value home, we can give you additional coverage on that. You don't have to settle for just the $250,000.
Okay. Fair enough. So those letter designations, do they actually stand for something, or is it just one of those random things like A or V or X? I mean, obviously we know that there's certain ones that are more dangerous or more of a serious issue, but I'm saying the letter designation itself, is there any reason why they use A or V or B or X?
Whoever determined how to rate flood insurance came up with this system. And within the A zone, there's probably about 100 different layers of A. A1, okay. A1B, AC, you know what I mean? Like it's crazy. And that, to a certain degree, that is always going to remain because that's what the mortgage companies will use to determine whether or not you need flood insurance. Within the rating of the policy is changing a little bit, but you don't want to get into that at all.
It will be, like you said, you could talk about insurance for like 15 hours straight. I'm sure that's one of those things that we could talk about for days. So we talked a little bit about the elevation cert, and I want agents to know that that is an option if, there is a flood zone. The house sits up on a hill. There is the possibility to have an elevation cert come into play, to have somebody come out and assess that, and that could save the homeowner a lot of money. Is that correct?
That is correct.
All right. So I want to make sure that agents know of that. Those of you who have never heard of an elevation cert before, that is something that potentially could come into play for your client should they sit in a flood zone, should flood insurance be required, and they sit kind of higher than the flood area. You may want to think about doing that. So, all right. So moving on. If there are multiple claims on a property from the current seller, so I think this is really relevant now because we've had all these storms. It seems like every year these storms get more severe. There's tree limbs that are always down. How is that going to affect the new buyer's homeowner policy moving forward?
So what the new insurance carrier will look at is what were the claims, okay? I'll bring up an example, which is a big one, is water damage, okay? There was water damage on this property. I mean, I have seriously come across situations where there's been 15 water damage claims on the property, okay, through 3 different carriers over a period of 15 years, okay? What the new carrier is going to say, has the situation been corrected, where there is no more water damage, and has there been any mold remediation done? So if the person's had water damage in their basement, 3 times over the past 5 years, was a correction made to stop the water damage from coming in? And was there any mold remediation? So there will be additional questions. I always tell the producers to go to the listing agent with the buyer's agent's permission, of course, okay, and ask the questions, because you really do have to find out those answers. So does it affect it? It can affect it. Let's say a liability claim pops up and it was a trip and fall because there's a tree root, okay, uprooting the sidewalk. So the carrier will come and say, has it been corrected? Has it been repaired? If it hasn't been repaired and the tree root is still raising the cement slab, it's going to be difficult because they know it's a liability claim waiting to happen. So if claims do show up on the property, and they do show up on our clue report, because when we run the quote, and the only way we can get a clue report is when we run the homeowners insurance quote, those claims will come up and we will have additional questions. No 2 ways about it.
Yeah. And hearing you talk about that makes a lot of sense in a way that maybe I haven't thought about it before, right? So has the problem been corrected? And if it is, then it's okay. If it hasn't, then it's going to cause problems moving forward. I mean, logically, that just makes a lot of sense. And so, yeah. So well done, Peg. All right. So when you're selling a home, when is a good time to cancel out the current homeowner's policy? For example, closing is scheduled for August 30th, but then the closing gets delayed a week and now it's scheduled for September 7th. Can you talk about just timing for a policy cancellation on the home that you're selling?
Absolutely. And the only answer is you absolutely never, ever, ever cancel that homeowner's policy until you have walked out of settlement. Okay? Never, ever. Don't even call the agent and tell them you're selling the house. It doesn't matter. Okay? Never, never, never cancel policy till settlement has been completed. And in today's environment, we see settlements being pushed back, moved ahead, pushed back. I mean, it's crazy. So the answer is you never, ever cancel a policy till after you have walked out of the settlement and gone home, then you call and cancel it. And you should cancel it the next day because you still own that home between 12:01 a.m. at midnight and when you go to settlement. Okay, so just in case, I mean, I know this sounds silly, but we've had a situation already where the movers were moving the people out of the house the day of settlement, okay? And one of the movers fell through the porch.
That's immediately what I think of. I think about the movers and all the damage they can cause in the property if they get hurt on the property, if, they, like you said, they fall through a porch. You never know what can happen the day of settlement, which I think is scary for all of us. But yes, once again, a very logical answer. Don't cancel the policy until you have the signed paperwork from settlement in hand.
And there's another reason for that. Okay, homeowners, carriers do not want to insure a home which is listed and up for sale, okay, as a piece of new business. If you're currently on it, you're fine, okay? But to go to an insurance carrier and say, well, they canceled their homeowners because they thought they were going to go to settlement last week, but settlement fell through, it's very difficult to get homeowners insurance in that environment. And one of the reasons for it is the foot traffic coming through the house, people looking at it. They don't want the increase in exposure. So two things to remember there. Okay. Don't cancel it until settlement is over.
So just an aside, Peg, you're in risk management. So do you feel like you think of everything in terms of risk management just in your daily life? Do you think about?
Oh my God, yes.
I don't, it's because in real estate, I always think of everything in terms of real estate. If I'm driving, if I'm on vacation, I'm driving, I'm at the beach, right? I'm thinking about, I go to Cape May a lot. I think about just all the wood involved in the old Victorians there and how much upkeep that is going to cost. So I think in terms of a realtor, I'm sure you think in terms of risk management all the time through your life. It's got to be a very interesting thing.
How many fire extinguishers do they have on each living level?
Exactly. All right. So I wanted to talk about, we talked about owning a home, right? And when to cancel a policy. I think a lot of realtors out there may not know that if they have a tenant, like the realtor themselves, they own an investment property or they have a client who owns an investment property. They get a tenant in the property. The tenant obviously has rental insurance, and we're going to get into that.
Yeah, but say obviously. Don't say obviously. All right.
Not obviously, but hopefully they have a rental policy. But can you talk about the policy that the landlord should have if they are no longer living at the property? They have an investment property. There's somebody living in the home. Can you talk a little bit about what the landlord needs for their own coverage?
Yes. Okay. It's called a dwelling fire policy. And just like homeowners policy has different levels, on a homeowners, you always want an HO3 or an HO5. On a investment property, you always want a DP3. The DP3 means you get all risk insurance to the building. It's very, very important. Okay. You don't have to add on coverages. You're going to get everything you need in the basic policy. In addition to that, you should always put on some contents coverage in that investment property. Something in there must be yours. Could it be a washer, a dryer, a refrigerator? So you should have some contents coverage. Nothing that belongs to the tenant is covered under that, but whatever belongs to you is covered. You should have backup of sewers and drains. Okay, backup sewers and drains is a really important coverage on all property insurance, be it homeowners or be it an investment property. Okay. Some carriers, which we represent, will actually give you extended replacement costs, which is really critical right now. We've been selling extended replacement costs on every single homeowners we've written for the past 20 years. Okay. On investment properties, it's just as important. You're insuring the home now for, let's say, $150,000. Okay. Extended replacement cost means in the event of a claim, your coverage is going to go up by 25 or 50% to give you additional coverage on the structure. Important coverage to have, especially today. I used to say it's a way of getting your little legs up over inflation, but with the cost of building materials going up now, that's just a really important coverage to have. And last but not least, always liability, okay? You own that property, okay? Your tenant has a guest over. Not the tenant itself, but the guest falls down the steps and breaks a leg, trips over a coffee table. It doesn't matter. It's your property. You're responsible, okay? So the first person they're going to sue is you as the owner, and then the second person will be probably the tenant. Okay. So it's very important that you carry an absolute minimum of $500,000 on liability. And if you can get $1 million, get $1 million. And if you only own one investment property, but if you own multiple investment properties, you should definitely have an umbrella policy, which is a whole different topic.
Yeah, we may get cut short on that today, but you're kind of answering my next question for me, and our last question. I think the other topic that we get a lot is when we have potentially a tenant, we are filling out a lease, and we talk about for the tenant contents and liability insurance, right? So how much in terms of liability insurance should a tenant carry? Now, you had mentioned at least $500,000, and that's what I have heard. But I've seen on leases $300,000. I've seen $100,000 from the tenant. What do you recommend that a tenant carries? And is it dependent on the property?
Okay, my previous comment is what the owner of the property should cover. Yep. But my same comment will be for the tenant. Okay, $500,000. The difference in premium between $300,000 and $500,000 could be $20 a year. Okay, what the landlord should be the most interested in is that limit of liability is going to be enough to rebuild the house. Okay. His own policy on the building, the dwelling fire policy, is going to respond to rebuild the house and to get him up and running again. But what he should consider is his insurance company, if the tenant was in any way neglectful, the old burning candle left alone, they're going to go back against the tenant and try to recover the landlord's cost of the repairs and the renovations, and also ensure that the person gets their deductible back and all that. So $500,000 is an easy, I would never go less than that. The other thing to mention on the investment property is just make sure that the owner of the property has enough loss of use coverage in case there is a serious fire to cover their loss of rents for at least a year. Another important part of the dwelling fire, which I forgot to mention before, but since you brought it up.
I think that's great information, Peg. I mean, I think for us listening out there, there's been some stuff in this interview today is just really, really important stuff. I mean, this is a matter of saving our clients what could be potentially a lot of money. And, a side note, to what you had just said about the renter's insurance, I always do wonder. I know that the difference between covering, say, $300,000 in liability insurance for a tenant or $500,000, I didn't know what the discrepancy was and what they pay. I knew it wasn't much, and I knew it made sense to go with the higher policy. But now that you're mentioning, maybe it's $20. There is no reason for us not to put in a bare minimum of $500,000 liability insurance into our leases.
Nope.
That's just great info.
Yeah. And as far as the property owner, the person who owns the property, always go for higher deductible and more coverage. Never give up coverage. Go to a higher deductible. The chances of a claim happening are certainly there, but the difference between the $1,000 deductible and a $2,500 deductible would make up for adding all those additional coverages that you really need. And may I say one more thing, because I'm Absolutely. Not sure you didn't bring it up, but I think it's an important thing for people to remember. It's calming down a little, but there in the spring market, we have people who were buying the homes, but the sellers had no place to live. So the buyers were renting back to the sellers for a brief period of time, a month, 2 months, 3 months. Okay. We have a great policy for that. Okay. One of our carriers does a great job in letting us issue a homeowner's policy, which keeps the mortgage company very happy. It's a homeowner's policy. Okay. It's not an investment policy. It's a homeowner's policy. Allows the sellers to stay into the home And when the sellers move out and the buyers move in, we don't have to change the policy. Okay. We just have to take away an endorsement that we put on there.
That's awesome, Peg, because I'll tell you, I did have a couple cases this past year of a post-settlement addendum where basically we're letting the seller stay in the property for a matter of time because either, number one, there's not many listings on the market, so they have to be able to find a place, number one.
Right.
And number two, sometimes they may have a custom home being built that, they said was going to be ready in August and now it's not ready till September. These things happen all the time. So that is great information for everybody.
I have a little note. I wanted to make sure I got that in there because it's a good plug for Trident Insurance, but it's really incredibly valuable coverage that we have the ability to give someone that is going to make them very, very happy. So
that's great information, Peg. Great information. It's awesome.
Not going to delay settlement, the most important thing.
Yeah, I'll tell you what, that's the most important thing for the sellers and for the agents, to keep us, from being completely stressed out through the process. So, Peg, I want to thank you for your time today. This was great information. I think there was a lot of value in what you put out there. And if people want to follow up about anything that we talked about and have questions, make sure to reach out to your local Trident rep in your offices. Ask them some questions. You can follow up about what we discussed today, Peg and I. And Peg, hopefully I'll be meeting you in person at some point in time. It's nice to meet another person I haven't met yet. So this is our first introduction together.
Okay. Jason, I thoroughly enjoyed it. If you ever need my help, just let me know.
All right, great. Thanks so much, Peg. That was the interview with Peg Dynakowski today. I found that to be extremely informative, and a couple takeaways that I had from our conversation. Number one, when we think of issues as realtors with homeowners insurance, we're usually thinking of things like knob and tube or potentially flood insurance being required on a property, but we often don't think of, okay, what is the age of the roof? What is the plumbing situation? How old are the pipes? Is the heater very old? Does that pose a risk to the property? We need to think more in terms of the totality of the condition of the property in terms of its insurability. Number two, specifically talking about flood insurance, it was interesting to hear Peg say that every home is in a floodplain, right? We just don't think of it that way as realtors. We only think of it when flood insurance is required by the lender, and the lender is the one who decides what properties needed flood insurance, what is going to be required, and how much that is going to be. And also, if you do have a property that sits on a hill and flood insurance is required, it may be a good rule of thumb to always try and get an elevation cert or a test done to prove that that property sits high enough above ground that the flood insurance will not be required by the lender. And the last point I want to make, and this is a small point but a very important one, for those of you who do a lot of rental transactions, or maybe you even have an investment property out there yourself, always require the tenant to carry at least $500,000 worth of liability insurance to protect you, to protect your clients. That is a good rule of thumb, and the difference between carrying, say, $300,000 worth of liability insurance and $500,000 worth of liability insurance is about $20 a month on average. So the next time that you're doing a rental transaction, or even if you own your own investment property, make sure that you have the tenant be required to carry at least $500,000 of liability insurance. That is a question that often comes up from agents, and I think it's just a good rule of thumb. Well, that's it for the episode this week. I thank you all for listening. We'll be back in another couple of weeks with a new guest and a new topic to cover. And if you haven't subscribed to the podcast yet or left us a review, please do so and help us reach more of our peers. In the meantime, thanks again for listening. And remember, stay safe out there, stay selling, and we'll catch you next time on the Everything Real Estate Podcast.